Good to have you. Crude oil prices extended declines further for a second consecutive day. The decline came after Washington said that it was in talks with Iran over the nuclear deal from which the U.S. had pulled out earlier. This had led to escalating tensions between the U.S. and Iran. And joining us in the studio to discuss this and more is research analyst from Afrinvest, Vivian Alozie. Vivian, it's good to have you with us and good morning.
Good morning. Thank you for having me.
All right. Oil prices dropped yesterday after opening the week high, as you've heard. What is the situation currently in the oil market and what is the outlook, you think?
Okay, so on Monday, we saw oil prices open at $67 per barrel. And this was following the Hurricane Barry, which we saw that affected the oil production at the Gulf of Mexico. Yeah. The Gulf of Mexico had experienced a decline of 73% of production. And this is quite significant to U.S. oil production, as it accounts for 17% of their total oil production. Yeah, so following that, we saw on Tuesday, oil prices tanked to $64 per barrel. Then, with that, it's as if oil price is hovering around the $65 per barrel and is finding it difficult to sustain any price above $67 per barrel. Sorry.
All right.
Yeah. So with that, we've seen the global trade tension from China further worsening demand, right? So the main dynamics in the oil market is actually demand and not necessarily supply, because despite the supply pressures that we've seen, the OPEC Plus, they've recently hinted that they are going to further cut price in December 2019 and could even extend up to March 2020. And we've also seen the Russian crude is still contaminated. Okay. We've also seen Venezuela, they're still down on their oil production. And again, we've seen numerous news of oil attacks on oil tankers. So these are all pressures on supply, right? So with that, we are still not seeing the oil price at the levels they were last year. So this is clearly a case of weak global oil demand. And so going forward, we expect the volatility in the oil price to continue, and even in the near term and medium-term outlook too is not looking any way better, right? As we still expect global supply to exceed demand.
And we can't take away the issue with President Trump on Iran. That's also affecting global oil, demand, as it were, regarding the oil prices there. Don't you think?
No, we don't. So right now, the global trade tension is further worsening.
All right.
Right. So recently on Monday, we saw the China Foreign Minister spokesman who hinted that China was going to ban any U.S. firm that exports a $2.2 billion worth of arms to Taiwan. And really, this is very interesting because Taiwan and the U.S. have a legally binding agreement for U.S. to assist it in its defense. So U.S. is a major supplier of arms to Taiwan. So it's as if U.S. cannot do without supplying arms to Taiwan. Yeah. And China on its own, China is seeing Taiwan as the most sensitive issue in its relation with the U.S. So he's not ready to relent, or he's ready to go any length or use any force to make sure that he brings Taiwan under his control. And we can even see from the GDP data that was released by China, we noticed that a bit of moderation in Chinese GDP growth rate, as it's moderated to 6.2% from 6.4%, and that is like the lowest in 27 years. So that shows that the trade tension is taking a bit of a hit on China. Yeah, again, although the sanction which we saw recently from China is not the first time. In 2010, we saw the China issue similar sanction on the U.S. firms, but that wasn't executed. Yes, again in 2015, we saw that. But with the rate at which the global tension is going, we fear that we're not clear yet as per what the execution will be like, because the situation now and then is not the same, is unchanged now. So now we are seeing a heightened global trade tension. So really, this is further worsening our worries of a global recession going forward. And again, we're seeing that in the first tariff, which U.S. imposed on China, the initial $200 billion tariff, it includes a whopping 194 list of 194 pages of items, which range from meat, vegetables, and all that. So really, this is taking a hit on consumers. Consumers are getting stuck in the middle, and the global tension is escalating. It's not getting any better. It's getting more expensive. So we fear that this might fuel global recession coming in the future.
All right, Vivian. Now, let's take a look at other issues. Coming back home, President Buhari has ordered the immediate payment of 30,000 naira minimum wage, but the Trade Union Congress, that is TUC, is concerned on its delay. Your thoughts, and how soon do you think this will be implemented?
Yeah, so the minimum wage, which was signed by the president since April 2018, is yet to be fully implemented. So on our part, we see that the full implementation is highly unlikely. Because looking at state governments, for instance, states like Ekiti, Osun State, and Oyo State, they are finding it difficult to pay salaries. These states are generating, their internally generated revenue is poor. And most Nigerian states are highly dependent on FAC allocations. FAC allocation itself is a factor of crude oil revenue. Crude oil revenue experiences volatilities in the global oil market, as we've been seeing with oil price here. So really, the major question is, where is the funding coming from? So even at the federal government level, federal government has a lean pause. From the 2019 budget, they have projected a 2.3 trillion naira on personnel costs alone, which is approximately 26% of the projected revenue. Yeah, so that is high already. So the major worry is the source of funding, and we fear that the government might resort to borrowing to fund this increase in minimum wage. And if that happens, that will further worsen our debt servicing to revenue costs, which is already as high as 60.8%. Yeah, so really, we don't see implementation coming in the near term. Yeah.
And we also remember the bailouts that was given to some of these states when they had the issues of inability to pay their workers, as it were, and which also alluded to what you just said regarding their low revenue drive, as it were.
Yes.
Now, let's take a look at the MBS data on inflation recently, which shows a significant moderation for June 2019. So what drove this decline, and can it be sustained?
Yeah, so the June inflation, which we saw on Monday, which showed a moderation of 11.2%, that is the lowest since this year so far. Yeah, from December 2018 rather, we saw inflation at 11.4 and now at 11.22%. Yeah, so this was a sharp decline from what we saw in May 2019. May 2019, inflation was at 11.4%, and what we can attribute this to a high base effect, which was across board. And high base effect is simply comparing the inflation rate with the corresponding month of previous year. So as at last month, at the corresponding month of previous year, we had a higher inflation rate than now. So that is why we saw this sharp moderation in inflation. So this is not the new norm. So we believe this is just a one-off effect, although we still saw an increase in month-on-month core inflation. Month-on-month core inflation is increased by 0.85%, and we believe that this could be attributed to the immediate implementation of the upward revision of the price at which import duties are computed rather by the CBN. We saw that in June. It was revised upwards from 306 naira to 326 naira. Yeah, so so going forward, the outlook on inflation, we still see the food inflation being pressured, as there's no solution in sight yet for the header-farmer clash, and we also believe or expect that the entry into the harvest season, which from July, August, we believe that will cause a decline or a moderation in food prices, which we expect to filter into the food inflation rate and overall moderate headline inflation. So overall, our outlook on inflation still remains 11.3%.
All right, and of course, there'll still be a lot of anticipation for the MPC meeting, which will be holding very soon as well.
Yes,
very good, Vivian. Now, how did equities market perform yesterday, and what were the drivers, you think?
So yesterday, we saw the equities market sustain its bearish strong, which we've seen over a long period of time. Despite Airtel listing, MTN listing, we still see the bearish strong in the equities market. So we saw the all-share index declining by 49 basis points, bringing the year-to-date loss to 10.8%. And what that means is that from the last trading day of December up to yesterday, investors have lost 10.8% of their wealth, of their investment into the equities market. Yes. Well, MCN, CCNN, and WAPCO. So due to sell pressures around the stocks, we saw the all-share index dragging up to 28,200 points. Yeah. So on the sectoral performance, we saw the consumer goods sector and the insurance sector as the long gainers. Right? So for the insurance sector, we've noticed a considerable price appreciation in Lasaco Insurance.
Okay.
Yeah, Lasaco Insurance has been, initially there was a suspension by the NSC for late filing of results. And then on Monday we saw NSC lifting this suspension. Yeah, so, and that on Monday filtered into, or investors priced that into Lasaco, and we saw price appreciation, buying interest in Lasaco. Lasaco gained on Monday. Yesterday, Lasaco gained. So, with that, so we can say the insurance sector was, insurance and consumer goods sector, they were the major boosters of the stock market yesterday, although sentiment was generally bearish.
All right, and it's good to see a bit of dynamism in the insurance sector, which has been, well, if I may describe it, as being moribund for a long time, and you know, it's a good development, as it were, despite all the bearish runs we've been hearing every now and then.
Yeah, we believe so.
Yeah. Now, what is your outlook on the market for the rest of the week?
Yeah, for the rest of the week, yeah, so we expect to see, you know, as we are in the, this is third quarter already, and we're expecting the half-year earnings, the second quarter earnings from stocks on the stock exchange. So far, we've seen Flour Mills released this full year 2018 result, and the performance was shy of our expectation. It was poor, as both the top line and bottom line declined, and we also saw investors pricing that in Flour Mill. So with that, we believe that the outlook going forward in the markets will depend on the figures coming out from these stocks listed on the exchange. So depending if they are positive or negative, we believe investors will price that in. But overall, we maintain a general bearish outlook in the absence of any economic stimulus to stir investors' appetites.
Indeed, talking about investors' appetite, for your first-time investor, okay, I just come to you and looking at the analysis you just gave regarding the market. So where would you want me to put my money in right now? Which sectors will be the most active, you think?
Oh, well, the banking sectors, banking sector stocks, they're the most liquid currently. Yeah, so for investors, although if you're a first-time investor, I would advise you that you should have long-term investment objective if you're looking at the equities market. Otherwise, the fixed income market is a safe haven. Yeah. But if you insist on investing in the equities market, we believe the banking stocks are very liquid, and well, most of these stocks pay both interim dividend and full-year dividend. So and they are not doing well on the stock exchange. And we believe that when the exchange rate rebounds, we expect to see buying interest and a bit of price appreciation in all these stocks.
And talking about price appreciation, and in 30 seconds, the telecoms entrance, what is the activity there? Has the enthusiasm waned, or we're seeing that excitement as we had a few weeks ago?
Really, what is happening in the telecom sector is not particular to the sector, it's not peculiar to the sector. It's a general bearish sentiment. The outlook, the business climate is harsh. Yeah. So these stocks are not thriving. Their revenue to up to the profit after tax is not improving, right? So we are experiencing a general economic downturn, right? So whatever it is that is happening in the telecom sector is not peculiar to the sector, it's peculiar to the economy.
Indeed, very good. All right, Vivian Alozie of Afrinvest, many thanks for your thoughts on those issues. Good to have you.
Thank you.